Tech or non-tech? That is the question. What's more important, EPS or subscriber growth? Subscriber growth for Netflix. Not all great earnings. AT&T in the gutter, no shocker there. CC Lagator 835. He's going to talk about some option setups in Netflix, the overall market. Who wants puts nowadays? Let's see if Triple D has any tidbits here, like the TLT and the IWM yesterday. It's hump day. It's Wednesday. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Okay, traders, investors, you know what we're doing. We're up 24 handles, 49.19, trading at the highs of the pre-market session. The buck helping out, down 44 cents at 102.96. Bonds rebounding from yesterday, up a little over a half a point, 102 and 12/30 seconds. Crude up 28 cents, 74.65. When are the oil stocks going to pay attention to that? Gold up 960 at 2,035.40. Silver trying to get in the 23 handle, up 47 cents at 22.93 and a half. Bitcoin futures trying to put a bottom in here and nicely off yesterday's low, up $800 at 40,035. Let's bring in Triple D. And Triple D, I mean, I guess the song remains the same.
Yeah, it does. The song remains the same. AI or bust. I mean, these are the stocks that are moving here once again. And what we see is that when you get any technology stocks that has a significant dip, they seem to find buyers. If it's non-tech, the dips aren't getting bought. And that's what's clear. You know, we saw it, multiple times. ADM, last couple days, no dips to be bought. Nobody cares. This is not an AI play. Nobody wants to buy that dip. We saw it with 3M yesterday. Starts dipping. Nobody cares. DuPont reports the slightest little cut of guidance, and they hammer the stock. And this was a preliminary report, which we can get to in a second. Bring in Aaron Bree here.
Yeah, bring
this
in
market
Aaron.
is all about tech, and it doesn't really care about much else.
Yeah, I mean, like you said, tech is leading the market right now, whether it was NVIDIA and AMD last year for the last 6 months or last night, Netflix reporting earnings, bringing us higher after the close. Netflix, like you mentioned, Joel, just absolutely crushed it in terms of subscribers. So the street was expecting about 8.7 million paid membership ads in the fourth quarter. Netflix did more than 13 million, so almost beat that estimate by 50%. Netflix cited strength again in that ad tier based subscription. EPS came in slightly lower than expected, but revenue was higher. And the company also said their margins are getting better. So Netflix is one of these tech companies that has set out to cut some costs. And so far, it looks like it's been working for Netflix. Again, they guided up in the next quarter. The street was expecting for the next quarter an EPS of 410. The company said no, that's actually going to come in closer to 450. So either way, I mean, Netflix just crushed it on the earnings. Again, yesterday when we talked about in the past when Netflix had some of these really bad earnings reports, those were about subscriber growth. That big drop on 30%, I believe it was the first report of last year or 2 years ago. Netflix, it was the first quarter where Netflix's subscribers went down. They actually lowered and didn't add any. So now the company is back to adding subscribers, both growing and cutting costs. So either way, if you're a Netflix owner, if you own the stock, you were very happy with that report yesterday. Other stocks were trading higher alongside that news.
I mean, are they going to be moving Netflix into the Magnificent Seven and Tesla out tonight? That's going to be the question.
That's what yesterday. Yesterday I thought Netflix was already in there. I mean, it's
some people said the Magnificent Eight because of Netflix, but you know what's going to happen is if Tesla misses tonight or disappoints, and I'm very nervous about the Tesla report because I just don't think there's a lot of people going out there and buying new cars. Lots of people still obviously subscribing to Netflix, lower ticket stuff. I mean, $15 a month. Let's go. I want to watch my shows. People can afford that. You going out and buying a $50,000 or $60,000 new car? I don't think so. And that's why I think Tesla, and I know, we got other people thinking about, the bots and they're doing other things. And that's all exciting, the humanoids. But we're a long ways away from humanoids making money. And I think, it's still a car company at this point in time. I'm very nervous about the Tesla. I think what happens here too is you get one major tech company reporting Netflix. Now the bar a little higher almost for Tesla because it's like, oh, Netflix blows it away. Tesla going to do good here too. Tesla lifting here in the pre-market along with other tech stocks. I'm very nervous about the Tesla report tonight.
Okay, just going to the Netflix here, blew away the 50. I had to go to the weekly to do the 0.618. We're above that. The next fib number is up at 575, so I'm giving you absolutely no help at all. I will say the pre-market high is 544.50. You can look at that as a potential target. The other thing I would say is we've exceeded the straddle price, so maybe they'll come in. I think it went off the board at like 40 yesterday. I'm not exactly sure. So there's maybe an extra $10 of premium in there to see if it comes in from the straddle price. But you're absolutely in no man's land as far as resistance go. Going back to 22, fell from 600 to 350 in a matter of 3 or 4 months. Is this giving a boost to the other media stocks, the House of Mouse traded
a
up
little bit, Joel.
a little bit?
So Disney, you can see up very slightly this morning. I think less than 1%. Roku up more than 2% in pre-market trading. I guess people saying, hey, look, people are still watching streaming on their TV. Roku's a big provider. A lot of people watch Netflix through their Roku, but I mean, this one, Roku, I don't know. I don't like this one. I'm not in it. But again, getting a small bounce there. But Netflix, I mean, we talked about this the other day where Netflix is right now benefiting from consolidation in this space, right? I mean, if you don't really need, I guess, 6 different streaming things right now. That's kind of my view on it. I don't know what you guys pay for, Joel and Dennis, but I'm like, why pay for HBO, Disney Plus, Netflix, all these 10 different things when if you pay for, like, if you can't find something to watch on Netflix, there's already a million things on there. Do you really need to go from there to these other things?
And again, they're always getting more content with the WWE deal. I mean, they're always working on content. I keep saying the same thing about Disney Plus. I log in there once a month. The kids watch every once in a while, but I log in literally once a month. And there's like 5 new shows in the last month. It's absolutely pathetic. There's nothing new to watch on Disney Plus. The stuff they come out with is actually pretty good, but they just don't have enough content. I've said this the whole time. Disney, if they wanted to go in all in on streaming, they got to have more content. Netflix is always pumping out the content like crazy. Like, I mean, you don't log into Netflix for a month. There's 100 new shows to watch, AB. There's so much.
Is there anything any good out there?
You don't need any of this other crap. You can just get Netflix, and there's so much to watch on Netflix. One-stop shop for streaming. That company's got it going on. They've got to figure it out. I mean, they're doing everything right where all the other streamers have been doing everything wrong.
$15 is $15, right? It's not, that's like 100 iPhones or something. So, very reasonable price.
So reasonable.
Yeah,
So just stop for a second. So show that, I don't know if you got my tweet here, but speaking of $15 here, I mean, it's $15 for a pack of cold meat at the store there. I went shopping yesterday. I couldn't believe, and again, inflation. I always buy this deli pack. I don't know if you can see my tweets there, AB.
Yeah,
but I always buy, and I'm digressing because of the $15. But I always buy this deli pack of meat for my kids for their lunches, and it's $10.
Costco.
This deli pack has been $10 at the superstore for like the last 2 years. It's like the only thing that didn't inflate. Well, they must have caught it. And somebody's like, well, why haven't we put the price of that deli pack up? They don't raise it to 11. They don't raise it to 12. They don't raise it to 13, not 14, not 15. They raised it from $10 to $15.99 overnight. I'm like, holy crap. I'm like, that's a pop in price.
How much is that? How many pound is that a
I think
pound?
400 grams of meat, $15.99.
Because
so, I mean,
you're
can't
getting ripped
afford.
off. You got to go to Costco, man. I
can't afford the Costco membership.
Yeah,
just all right. Just one more thing.
But listen, so all I'm saying is $15 is nothing anymore. Nothing. So $15 a month, people don't even think about $15 a month. It doesn't even cross their mind. So Netflix, people got to subscribe because they do stop the password sharing. People subscribe. Subscribers go up. That's the best thing they do. And we talked about that. Stop the password sharing. So you know what? Netflix, again, it's the multiple that would keep me out of the stocks, trading like 38 or 39 times earnings here. But I mean, it's a low ticket luxury.
Exactly.
Low ticket luxuries, your iPhones is still low ticket. I know people say, oh, $1,500, but they finance that thing, 0% financing.
Free.
It's a low ticket luxury. Your Netflix low ticket luxury. Going back to Tesla, which we're going to talk in a second here, is a high ticket luxury. I think in this 2024, you avoid the high ticket luxuries and you load up on the low ticket luxuries.
All right, I know we're really digressing here, but I have to get you guys' opinion on something because we have a disagreement in the Elconin household on a TV show.
Oh, no.
Yes.
What?
I don't like it. And Lisa and Dana say I'm absolutely crazy.
What?
And it's on HBO, The White Lotus.
I haven't seen it.
I haven't seen it either, but I know some people that really love it. But I feel like mostly the people that I talk to that do like it, Joel, are women. Is it more like geared toward a female audience? Do you think?
I mean, there's both. I don't know.
I'll have to check it out. But okay, speaking of this, Joel, we talked about it, or asked yesterday, what is Netflix going to be doing with AI? So one thing that it's doing right now is that if all of us were looking at our Netflix home screen, it'll show us different thumbnails for the same shows based on our preferences. So say we're looking, say White Lotus was on Netflix, and it was showing me a picture of like the female lead saying, oh, you got to check this out. But then it was showing, you a picture of something else saying, look how great this is based on your preferences. So it'll have this customization on the home screen, but still the same content. So they're basically just trying to drive all the clicks to Netflix's own original shows by changing what you see in the thumbnail, again, based on your preferences. So a 25-year-old guy might see something completely different than a 25-year-old girl, even though they're looking at all the same shows. So just something interesting they're doing. Something I also wanted to ask you guys about, I mean, just in terms of in general market earnings reports, when the stock is trading higher into it, either trading higher or lower into it, how much weight do you give that? Like, do you guys think, oh, some people really must know something here? Institutions are loading up. I bet the report's going to be good. Versus on the flip side, Tesla's been trading down big time into this report. Do you think that is people just making these speculative claims, or that people actually have some knowledge that, hey, this is heading toward the wrong direction?
I think there's people who are feeling it out, and I think there's somewhat the market sometimes figures it out. But for the most part, it's just setting the bar, and we talk about the bar. And when the stock's running up into the report, the bar is very high, meaning they not only have to beat, they're going to have to blow it away. If the stock is depressed into the report, the bar is very low. That's the one thing going for Tesla, is the bar is quite low, and we should, talk Tesla here, because, man, it has been a rough year for Tesla. As good as it has been for so many tech stocks, it has not been a good year for Elon Musk. I mean, Tesla started the year up here around $255, and we're now sitting at $212. So just quietly down 20% in basically less than 20 trading days. Tesla has had a really ugly year so far. With that being said, the bar is low. So if they say anything okay, maybe they talk about the humanoids, maybe he talks up other things. Maybe that helps the stock price. But again, I'm worried about that high tickets, low ticket stuff. Netflix, low ticket luxury. Tesla, high ticket luxury. I think the market's nervous about that too. I think it's another reason why Tesla
There's
has been
more on the
beating the
road.
report.
There's more on the road. That's all I can say. I gave you the drive-through indicator like during COVID with the McDonald's and all the restaurants, and I'm telling you, there's just a lot more Teslas on the road. I know they're selling at a discounted, whatever price, whatever the margins are. That's why I wouldn't be short the stock going into the report, especially with the way that it's sold off as of late, and that being a big component of the S&P, it hasn't participated. There are more out there. How that's going to shake through on all the numbers, I don't know. But a parking lot at the gym, parking lot at the grocery store, driving on the freeway up to Ann
They're
Arbor,
everywhere. I'm with
they're
you,
everywhere.
Joel. You go into
Yeah.
the city and there's Teslas everywhere. The
So
question is, have the people who, want to own a Tesla already went out and bought a Tesla? I mean, it's going to take a lot to get the masses in there. They're not cheap cars, Joel. That's the issue I have. I don't like any of the autos. So it's not just a Tesla thing here right now. I just don't like the autos in general because I do think 0% financing is a tough thing and it's gone. And that was what really drove, pun intended, drove the auto stocks for a long time. With 0% financing, not even close. These are not cheap things to go out and get. And if you're a little bit strapped for cash, if you're looking at your 2024 and saying, man, I'm just a little bit tighter than I was in 2023, you're probably not going out and buying a new car. So that's why I'm just staying away. And I mean, it's been an impressive run up for General Motors.
yep.
Nice comeback. Impressive run up for Ford. Nice comeback from the lows, although Ford's starting to sell off here again. I just think I don't think I want to own these stocks right now. Tesla is still best of breed. He's working on the humanoids. He's working on a lot of things. You never bet against Elon Musk, which is why I don't like shorting the stock either. But I'm nervous into this report.
Yeah, and I mean, Joel's mentioned that you're seeing more and more cars on the road. Someone in the chat's pointing out, but you're also seeing more and more price cuts. So, how good is it to sell more of these cars if their margins aren't as good and they're selling them for less? Also, I mean, look, for a lot of times, big Tesla bulls were hammering the table on Cybertruck, Cybertruck, Cybertruck. Well, now we've at least started to see some deliveries, and I don't know what you guys think, but I would not consider this a successful rollout so far, just in terms of, from what I've seen a lot more videos of people showing problems with Cybertrucks, them getting stuck in the snow, whatever, than people
I saw that one.
raving about them. I mean, have you guys seen people raving about the Cybertruck or being really bullish on it right now?
We're going to end this Tesla discussion. There's only one, or not only one, but there's one main reason why Tesla's not doing well.
What?
And it has nothing to do with cars. It has nothing to.
Musk?
Yeah. Well. What did he buy? It's
Twitter.
Twitter.
Twitter's been terrible for him.
Yeah.
I mean, Twitter is just an absolute mess. It's
Yep.
a mess. Everything that he's done, that he said he was going to fix with Twitter, he made 10 times worse. The fake accounts are just out of hand. The advertising to me is just ridiculously out of hand. The accounts I want to follow, I can't find anymore. Like I follow a bunch of accounts. If I interact with one other, and I think I was saying this, if I interact with one person on Twitter, my feed just becomes that person. It's just like crazy. It's like, oh my God. And maybe it's because I don't interact with that many people, but I interact with one people, and all of a sudden, boom, 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 boom. My feed is just littered with that. I mean, Twitter is an absolute mess. He has made this an absolute mess. I can't even get rid of the fake accounts now. I go on, there's a whole bunch of them. People tweet at me. I fill out the form fails every time. It just fails. It's like, oh, try again tomorrow. So you can report somebody else, but when you actually are the person that's trying to put in the fake account report, it wants your ID. Why it needs my ID when I'm verified is ridiculous in the first place. But it wants my ID.
My phone
I
number.
upload my ID with their stupid little picture thing, and it never works. I've tried multiple times. Maybe it's just me. Maybe I'm doing it wrong, but it never works. So the fake accounts are just completely making Twitter an absolute mess.
Yeah, there's definitely a lot of people pointing back to that purchase of Twitter as a bad business decision by Elon. I mean, the one thing I will say that they have done is they laid off a large portion of their staff, probably saved a lot of money there, and I think a lot of people are still using the Twitter app. I mean, you had a lot of people talking about Blue Sky or Mastodon or these different Twitter alternatives last year.
Threads is
At the
just
thread, at the end of
I looked at Threads yesterday. I think I'm gonna delete the app.
yeah, I
There's
was
just
gonna
no
say
point.
at the end of the
I never
day,
put it on.
at the end of the day,
No
Dennis, you're
point.
still posting the meat pictures on Twitter and not
Yeah,
other
I know.
places.
It's
So,
true.
so
It's true.
you know,
I'm
some of
still
these.
using Twitter, but I mean, my experience is less enjoyable here.
I agree.
I wish he would have made the experience better. And I'm a big Elon Musk fan. I still say, from an innovation perspective, you could argue Elon Musk is one of the greatest innovators of in the last 100 years. I mean, the stuff he has done
The
from
cars,
PayPal
technology,
to
yeah.
Tesla to all the things that he's done. I mean, SpaceX is just absolutely phenomenal company, the things he's done there. So you've got to give him that. And you never count Elon Musk out. And the one thing I will say about this report is I don't think the sales going to be that great. He is one that likes to keep his stock price up. So maybe he starts talking the humanoids.
Yeah.
Maybe talks it up somehow. I mean, that's the wild card here. If Tesla can get these humanoids going, and we're all going to have a humanoid in our household helping us out, that's the wild card. I do wish they would have bought Boston Boston. What is that? Boston Dynamics. I wish they would have bought Boston Dynamics when I think it was the other
those little robot
Hyundai,
dogs. Those little robot dogs are kind of cute. I gotta say, I'm not a big
Boston Dynamics has humanoids like they're way ahead of Tesla. Way ahead.
Well, we're going to talk about Tesla in a little bit when our guest comes on in 10 minutes. Let's move on to some of the other earnings we got. We've been talking about semis, but it's not all semis. Texas Instruments reported last night, and it did not go well. Company trading down 3%. The revenue was expected to come in above $4 billion. The company said, no, it was a little closer to $3.5 billion. So anytime, you're only expecting $4 billion worth of revenue and you come in at 3.5, that's a big miss. So again, showing you that you really are looking for the best of breed here when it comes to semis and not just buying anything at all. Joel, what are we seeing in terms of the chart? Are people buying? Are people buying the dip?
I'll comment and then let Joel do the technicals.
Go.
I want to say this is a disaster report for Texas Instruments. If this was a non-tech stock, this stock could be down 15 to 20% on this. But because it's a tech stock, it gets a pass. Because it's a tech stock, there's just underneath demand for all tech stocks and all chips. Down $5. This report is not good whatsoever. Take the numbers at face value. $1.49 versus $2.13 last year.
Horrible.
Like, that's just seriously going in the wrong direction here, folks. Expected Q1 revenue, 3.45 to 3.75 versus 4.06. I mean, DuPont lowers guidance by a couple of cents, and they knock that stock down 10%. Texas Instruments lowers guidance by like 15%, and they don't even hardly knock it down at all. That's the difference, folks. Tech stocks are getting a pass. Buying tech stocks on weakness is working. Buying non-tech on weakness is not working. So keep that in mind here. We are in 2024, and the investor only cares about tech stocks. Microchip warned. We talked about this last week. Stock was down for half a minute, and they just can't stop buying it now. And they don't even care that it warned because it's a tech stock. Right now, tech stocks are just in a rip-roaring bull market.
That has chip and tech in it. So I mean, I don't know how you could ignore that.
Microchip tech.
Microchip. Who cares if they change their name to Macrochip? I mean, this thing would be at like $300.
Yeah, there you go.
The TXN. Real quick technicals. I don't know if we have a lot of people that trade this. Pre-market low 164. So you got a 4.5 point bounce. This is my candle of interest over the next couple days. You had a big up day. You had a low at 163.18. I don't think you're going to see that today because you're $5 above the pre-market low. Nice gap fill. So if you got jammed short into this report, there's a little reprieve here. I don't know if people are running out to start new longs, but I think from a short perspective, I don't know if you're going to get a look at that pre-market low at
There's just too much
164.
underneath demand for tech stocks. I mean,
Exactly.
it's not a good report, folks. And it wouldn't surprise me if it sold off a little bit more. This is not great, but again, just underneath demand for tech stocks and no underneath demand if you're non-tech. That's just what we're seeing here. Do the DuPont again. Let's give levels on this one because this is one of your big losers of the day here, AB. It came out of the blue. They just come out with preliminary guidance. And it honestly didn't even seem like it was that bad.
Yeah, so DuPont reported, DuPont announces preliminary fourth quarter. Let's see, I'm pulling up the numbers right now. Sales 2.9 billion, 12 billion versus a consensus 3 billion, and a little bit 12.2 billion estimated. EPS came in at 8.5 versus expected 8. So the EPS doesn't look like a huge miss to me.
No. This is preliminary numbers, so just to let you guys know, when a company comes out, it means they've got an adjustment, where analysts' expectations are. Sometimes they'll come out. DuPont wasn't due to report, I believe, till next week. So they're coming out early and just saying, hey, the quarter isn't going as good as we thought, but, it's kind of there.
It doesn't look yet.
This was a ridiculously, like, if they're hitting the stock down hard, I don't even think it's that bad.
No, 2.8 billion of net sales expected versus the expected 3 billion. So, $200 million miss there. Like you said, the adjusted EPS, they're guiding down to 0.63 to 0.65 versus 0.87. So, giving that warning. But to me, like you said, Dennis, it looks like, okay, the quarter's not going as well, but it's basically right there. It's just right below it. But instead, the stock is getting absolutely crushed this morning, down more than 11%, now about $8.50, $66 and a quarter.
Ooh, boy, oh boy, you're already back to that November low. It's 66.56. That's the only number I have for you. Just be aware that there was also a monthly. That's just huge. I mean, if this is going to catch a bid here, it better catch one really soon. If not, I think the only way to catch a bottom of it would be, maybe throwing out some bit if you want to own it at the half and whole numbers. The next monthly low comes in at 57.87. But you know when I stopped? I mean, I stopped really following this stock when it was DuPont, and then it was Dow, and then it was Dow DuPont, and then they spun off into three.
Dow
I mean,
again.
I don't. Yeah, now it's DuPont again, and Dow is back.
And Dow is back.
I don't understand. Dow's getting hit on this.
Does DuPont still have a lot of the legal, overhead, like headwinds that people are worried about, like 3M? Like I know they had some huge lawsuits.
I don't even know.
With their forever chemicals, basically that they put out these chemicals in the environment that don't break down, and they didn't, I guess, dispose of them properly. So I think there's some, potentially some big lawsuits. Maybe they might have settled it in the last quarter though. But either way,
says in 2023 they settled it. They defeat the massive class action over forever chemicals. 3M involved in that one too, man. 3M's in a lot of bad
I know.
lawsuits
I want to be
against
a lawyer
that
for
company.
3M.
Oh my God, you'd be cleaning up right now, Joe.
But look, yes, so we
on your
want to get
yacht.
the evidence again. And what I do for a living, folks, how I've made my living for 24 years is not looking at fancy charts and stock charts and buying breakouts and selling breakdowns. It's relationships and understanding pattern recognition. And what I see clearly happening is non-tech stocks, when they're selling off on bad news, are not getting bought. And tech stocks on bad news are getting bought, a lot of them. So keep that in mind, especially anything related to AI is getting bought at the dip. DuPont, you couldn't be farther from AI with DuPont, in my opinion. I don't see any connection to an AI story here whatsoever. This market is hot for tech, hot for AI, not hot for chemicals. So I'm saying on DuPont, even though this is a ridiculous overreaction, I'm still not buying it because, ADM, they're not buying that. 3M, they're not buying that. I mean, there's just no reason to just bounce in on day one on these non-tech stocks. So clearly, we get the dip and the Texas Instruments, even though if you're taking a face value, I think the Texas Instruments should be down more than the DuPont, but we're not taking a face value. Texas Instruments is still seen as a chip stock, still seen as a tech stock, getting forgiveness here for an ugly quarter. DuPont, no forgiveness whatsoever because it's nothing to do with tech and nothing to do with AI. Keep that in mind when you're trading here, folks. We want non-tech stocks. I'm avoiding them. Tech stocks on dips, I'm buying them. That is
Where is the headquarters for Dow Chemical?
Got to be in Michigan.
Yep. You should. What about you, Aaron? You're new to the state. Are you
Midland, Michigan.
You looked it up.
I looked it up.
Okay.
I don't even know where Midland is.
It's in the middle of the state.
In the middle. I was gonna guess that.
Did we blow by the GDP numbers without paying any attention there? I had it written down on our sheet.
Yeah, let's go back to that real quick, Joel. Good call. So pulling it up right here, waiting for it to come in on my Benzinga Pro. While we wait for those numbers.
It was at 8:30. It was at 8:30.
Yeah, just scroll back. It'll be there.
I blew it.
That's okay. I didn't really move anyways. You should have told me to go wide, though. Yeah. Anyways. Was it? They're not even talking about it on CNBC.
Oh, no, I don't. Wait, Joel, I think you
might be right, Joel? Was there a
Oh, no, I'm right. I'm wrong.
Tomorrow.
Joel.
Tomorrow. Oh, man, I can't read.
Yeah,
okay,
tomorrow. So tomorrow at 8:30.
I'm looking, too. I'm looking at the counter. I was like, I don't see any GDP number. I didn't even see any movement in the S&P. And they would damn well tell me to go wide when you think there's a GDP.
I would. I'm sorry. I thought today was the 25th. First mistake of the year. Okay. All right, Aaron, let's get one more in before we bring in CC Lagator talk options AI.
Yeah, let's go to Intuitive Surgical, ticker ISRG, reported earnings after the close yesterday as well. Double beat. EPS came in higher than expected, as well as the revenue. Stock trading. I didn't realize, guys, that this stock is over $150 billion company. So the EPS came in at 160, beat by 11 cents. Revenue at 1.9 billion versus, beat by about 30 million. So not a huge beat on either the EPS or revenue, but stock trading higher. For people not familiar, this is a company making like robotics parts for surgeries, which again, like to me, all sounds super futuristic. Didn't realize this was already a nearly $200 billion company. I guess in the medical field is a space that you're already seeing this innovation come in from robots and potentially, at some point, probably AI too. But either way, I mean, this thing is this all-time highs?
Oh, yeah, blowing it away. Made the street leaning the right way into this report. The top of yesterday's range, I'll give you that as potential support at 379.39, and you might have missed the high of the day in this one. This light, actually, over 200,000 shares traded when this popped to 406. So down $20 away. Find another resistance level there if you want to sell our ISRG today. But man, this thing's been around a long time, and AI and tech, right? For Intuitive Surgical.
I mean, it's got that story to it too. So, and again, the report wasn't blowing it away, but it was good enough. It is pulling back. The one thing I don't like is the after hours and pre-market action here, because we topped out over 410 here, and we've quietly given back a lot of those gains. You never want to see them leaking back over half the gains, because a lot of times when they leak back over half the gains, they give it all back. So I'd actually wouldn't chase this one today.
All right, well, it is 8:35. We've got our esteemed guest hanging out backstage. We're going to be talking to CC Lagator from Options AI. So without further ado, let's go ahead and welcome CC on the show. CC, how are you doing this morning?
Good. How's it going, guys? Good to see you.
Good. Let's start yesterday after the close. Our biggest headline of the day was, of course, Netflix's earnings report, trading way higher. What were you seeing in the options world heading into this report? I mean, we've seen Netflix be super volatile with earnings before, where people, playing it for a huge move to the upside or downside.
Yeah, it's interesting. It was, Netflix has moved a lot. I think 3 out of the last 4 earnings coming into this one. And the options were not pricing as big of a move as we had seen the last, 3 or 4 quarters. And that is an example of, so the options market, you enter into an earnings season and there is that backdrop of whatever's going on in the rest of the market, right? And the rest of the market right now is consolidation, grind higher, low vol. We've got the VIX basically at historic lows. And so earnings reports cannot escape that, right? They are basically a victim or a word like that of what's going on elsewhere in the market. So Netflix options actually were quite low going into this earnings in terms of IV, in terms of what kind of move options were pricing. Last week, they were pricing about a 6% expected move or something like 6.5%. What was interesting is it crept up into earnings, what the options were pricing as far as Netflix to move. It ended up being about just shy of 8%. And what are we up this morning? About 10%. So options, Netflix traders were trying to, they were signaling something. They were signaling a demand for something. And it looks like it was, if this is a good print on earnings, there were a lot of upside calls bought. And what that does is that shifts when you see that late attention into an earnings stock from the options market and from traders, they're basically clearing the path for a stock to actually make a slightly larger move. They're basically, if Netflix traders had come in and they were all selling the 500s, or what are we at, 400 or 500?
I know
If they were
500
500, right? If under normal conditions, people are probably buying Netflix stock. They're doing certain trades and they're probably just selling the 500 line, right? Going into earnings, clearly people were buying that line. They're buying the 525 line. They're clearing the path for that stock to go higher. And then Netflix comes out. It's a good report. People like it, and it allows that stock to travel higher. So that's sort of the interesting backdrop is can these earnings reports, our options, something to watch for would be, look at the expected move, go on like options.ai, look at the expected move of, say, who's reporting next
What was it for Netflix? Because we were looking at it.
So it ended up being just shy of 8%.
Wow.
Right?
So they were actually,
but it crept up.
Points,
like, so it was, I was shocked how low it was last week when I was looking, Joel, and it was like 6% or 6.5%. Clearly, some buyers of options came in late into that.
So do you think you had more people buying the options as opposed to in past reports if you would have seen more people selling because the IV is lower, because the VIX is lower?
Yeah. And I think what happened is I think people started looking at, and you can look on this on any options right now, is volatility is so low. And, Tesla is a great example. So going into this Tesla report, we've got, it's basically moved on average about over 10%, right? Over the last 4 quarters when it's reported.
Yeah.
I've got a move of, it was down 9%, it was down 10%, it was down 10%, it was up 11%, right? Those are its last 4 quarters. Its options are only pricing a 6.5% expected move for tonight. Right.
So basically the market it's not anything about the companies specifically that the options market is pricing in these lower moves. It's just because of that there's less volatility in the overall market.
Exactly. And what that is it could be an opportunity, right? And what it is it's not saying, it's the options market not able to escape how low volatility is outside of that event, right? And the opposite can happen, right? Where if you have the VIX at 35 and you go into an earnings season and the market's moving 4% every day, it's like, what difference does the earnings report at that point mean? Because you could do an options trade and 3 days later, the market could have moved 10% anyway into the earnings event. So this is the exact opposite, where it's like, nobody wants to own Netflix options a week and a half ago because they would just be sitting there just choking on them potentially.
Right.
And then you get right before earnings and people are like, okay, it could go here, right? And Tesla is going to be an interesting one because it'll be sort of a test of this theory that's 1 day old of mine, right? But it's but you know what I mean? It's like something to look for. So Tesla's expected move is 6.5%. And Tesla earnings, it's like, I've always felt like historically, sometimes it's like, there's sort of their car delivery numbers or whatever they call that number are sometimes more important than their earnings and all that kind of things. And so sometimes you kind of know the news. But as you all were talking earlier, like the Cybertruck, I mean, this could be an event, right? And the last 4 earnings, that stock's moved 10% basically, and options are pricing, I mean, almost half of that. So it'll be an interesting one, and especially to, you know, sort of Dennis's point, let's consider Tesla a tech stock, not a car company. And it's like, are all these moves to the upside that surprise, right? And so that's I think a good way to look. And you know, you can go on Options AI, you can go on our free tools, you can see our earnings calendars, you can see where they're pricing it. And you know, Tesla, there's something interesting. I just wanted to let me share screen real quick. There's something about, let's go. This is,
what about,
right.
I mean, so since Tesla's reporting today, and I guess there's after the hours, and there's only going to be 2 days of trading left in the week, do you think you might see more people buying out of the money puts or calls, knowing they could get a big bounce because there's only 2 days left till expiration?
Exactly. And I think, well, today would be the time to watch. So this, you know, we're starting the morning off with this 6.5 expected move, right? And what's interesting about this from like a technical perspective is you look back to this level, you know, when was that? That was back in October. You all can see my screen, right?
Yep.
Yeah, it's
Yes,
perfect.
sir.
Yeah, so that's right there, that level of about 195, let's call it. That is the expected move to the downside. That's where options are pricing Tesla to the downside. Now you take that to the upside, you know, and we've got a what level are we at there? We've got you know, call it 222, 223 to the
Man, it
upside.
seems tight.
Yeah, and you can sort of see where that falls on the upside. So to the Netflix example, and kind of what, you know, like with Dennis, what you were talking about earlier, it's like, all right, if this thing sells off on earnings, the expected move is probably right? You know, it probably finds buyers on your tech stock, finds buyers theory right here. That upside though, man, like where could that stock go? So that's something else to watch for, is like, are these beats of the expected move on, you know, even a slightly good earnings report? Do we see those big gaps higher where options were totally out of whack? And then Aaron, to your point, what that would have been is that would have been today, we're starting the expected move at 6.5%. By the end of the day, if that's over 7%, that's a pretty good indication that there were last minute buyers of options.
Got it. And so, I mean, right now, you know, we mentioned how the IV is lower, the VIX is lower. You know, you hear a lot of people say, oh, when the VIX is high, you want to be selling puts, you know, and collect that premium. When the VIX is low, you want to be buying buying options. I assume you're going to tell me it's not that simple, that when the VIX is high, you want to be a seller of options, and when the VIX is low, you want to be a buyer of options.
Yeah, well, it is that simple in some sense, right?
Okay.
So Tesla is a great example, where, or actually Netflix. Let's just go to Netflix real quick, because this is something I picked up yesterday when I was looking at the chart. But basically, when you are doing selling high vol, right, or buying, in this case, the VIX is 12.5 and you're buying low vol. Basically, what you are doing is you're saying that, you know, like you need the correct time frame for that to play out. So when the VIX is 12.5 and you're just buying weekly options and hoping that that low vol plays out, you are probably not going to be right. You are not buying yourself enough time, right? You are basically betting every day almost the 0 DTE move versus the options you own and the expected move of those options you own. However, the farther you go out in time, the more you're getting paid for that time in low vol conditions. So right now, you are not being penalized at all to go out a couple of months in an options trade. So for instance, Netflix coming into yesterday, and we're seeing yesterday's chart, and there you have it, like the 7.6 expected move. That was 530 to the upside for, you know, what options we're pricing for, you know, essentially this morning. If you go out and you were going out to say March, options in Netflix are only pricing, they're pricing less than an 11% move out to March. So just like sort of a simple quiz, would you rather own options for 2 days for an 8% move, or would you rather own options for 2 months for an 11% move?
Yeah.
Right. And that's the difference. And we're looking at it. You can sort of see this IV. In March, it's 38. Going into earnings, it was 111. Right. So it's 3 times as expensive to own a Netflix option this week than it is in March. So I had tweeted about this a little bit yesterday. It's like, you know, if you are selling the move in Netflix, I'm like, it's tight, you know, 7.6%. And the stock has moved, you know, on average a lot more than that over the last couple of quarters. I think the last quarter it was like almost 15%, right? But I was like, if you are bullish Netflix, or if you are bearish, or if you own a bunch of Netflix and you want to hedge, it's like, go out on this calendar and, you know, look out to like March and stuff like that, because the options market is not penalizing you in any way.
CC, I just want to go to just overall, market, talk the market in general here. I mean, are people only like selling puts? I mean, what's going on? What does the lack of fear in puts and the put volume telling you about this market?
It's crazy. Like, it is like exactly that. No one is buying puts. Everyone is selling zero DTE and 1 DTE options, right? Everyone's buying every dip. And I think I saw something the other day. Somebody pointed out, like, you know, that BF TD, right?
Buy the dip, buy the blank dip.
Buy the whatever dip it's like permeated into like so many parts of the market, right? And it's funny because it's like, it's correct, right? So retail has actually gotten less panicky over the last few years in some ways, and in a lot of ways. And the same thing is true in options. And you are not seeing a lot of people right now wasting money hedging or being bearish and buying puts, right? And that's why you're seeing that 12.5 VIX. There's not a lot of demand. And then the other thing, you guys will know this term, but for the audience, skew, right? And skew shows you how much people are like reaching for stuff really far out of the money. It's usually puts, right? And what that would mean is, if at the money options were 100, puts, a big put skew would mean people are paying 125 vol for like downside puts. You're not seeing much of that either right now either. And so that is the backdrop of this market. Is it is not, there's no fear in it, at least in the options market as of now. That means that dips will be bought, like to Dennis's point, particularly in these tech stocks. And then there is that potential that people start reaching for upside calls, and that kind of FOMO starts to play out. You know, I think last time we were on here, or I was on here, we were talking about IWM. It's a great place to look for froth, right? If you start to see IWM, you know, it looks like it tried to take out 200, it failed, you know, and it's been in that weird range for over a year now. Pretty defined range where every time it gets to 200, you know, that's a place to look for. If people are doing FOMO, like buying upside calls, that's the place you're going to see it. You're going to see it in those types of names. People are going to go crazy, and it'll be a mini meme stock era, right? And we are not seeing that yet. In fact, it seems like the rotation was back into the, you know, Magnificent Seven, FANG, you know, whatever recently. But, you know, like once we're through the Microsofts and the Amazons and the Apples, you know, keep an eye on that IWM, and keep an eye on, you know, the skew. Are people buying those small cap names?
So CC, I mean, we've seen just a huge increase in options trading in general since the COVID markets, even slightly before then. And since then, you know, more and more brokerages have rolled out more options for traders. And now, of course, with 0 day till expiration options on SPY, QQQ every single day. Has this been a good thing for retail traders? I mean, has this, you know, what do you see when it comes to the 0 DTEs?
It's been fascinating, and I didn't know what to make of it, right, when it first started. But what's been most interesting to me, and this is like dovetails a little bit on what we were just talking about with how retail trading has kind of evolved, like with that, you know, BTFD, and not like wasting a lot of money on hedges and things. You know, stocks always go up or whatever, which is a dumb thing to say, but they do over time, right?
Yeah.
And so that kind of maturity is actually, you're seeing it, a weird level of maturity in that 0 DTE market. And there was this assumption that it was just going to be straight up gambling, right? And there was going to be, you know, the less time for an options trade to play out, the dumber the trading would be. It's actually been a little bit of the opposite. And what people are doing on 0 DTE is they are trading the next 3 hours, or they are trading the next, 48 hours, as if they were at a hedge fund 10 years ago, trying to earn income on positions, over the next 3 months or something for that quarter. And they've just shrunken the time frame. And the behavior is not generally, there's a lot of gambling in 0 DTE. People are saying, oh, I think SPX can go up, 0.25% into the close or something. But what most people doing, what the majority of retail traders are doing, is they're actually trading the move, selling the move, doing credit call spreads when stocks open higher. They're doing credit put spreads when stocks open lower. They're doing sort of a 48-hour time frame, and they're looking at levels in the SPX. And then they're trading iron condors. They're doing things, and they're basically defined risk trades to try to, risk $300 to make $200 in a matter of hours, right?
Zero DTEs and defined risk trade. That seems like kind of an oxymoron there.
Right. Well, it doesn't need to. I mean, you can go in and you could sell a strangle or a call out, right? But most of these people are kind of defining the risk. And the way that looks in the SPX is, for instance, let's say the market opened up a 0.5%, right? Pre-market, and you go into the opening print and you're up 0.5%. What they're then doing is they're then, say, selling a credit call spread that is really just $5 wide on an SPX strike, up another, say, 0.5% or almost 0.5%. And they're basically saying that the chances of the market going up 1% today are, less than 15, 20%. And I'm willing to sell a credit call spread into that rally. And then if the market kind of pulls back a little bit that morning, they're then selling a credit put spread into it. It's pretty fascinating behavior. And it is fairly sophisticated, I would say. And it's almost entirely being driven by retail traders. Enough to the point we launched SPX trading on options.ai a couple of months ago. It is starting to dominate our orders, right? And so what we're seeing is, and we have these, you all know, we have these visualizations you can watch as the market plays out through these profit and loss zones and things, and people love it. And it is, it's almost like that in-game betting, like on a DraftKings or whatever, right? It's really fascinating stuff. And it's, I would say, I would go to bat for these people a little bit, because I've seen their behavior, and it is not degenerate from what I've seen. I'm sure there's degenerate behavior out there.
Well, but there's got to be another side to that trade too, just before you go. I mean, we could say, oh yeah, the market maker side is like sitting there and selling these, to these degenerate, but there's the degenerate gamblers on the other side of this trade, CC. So I mean, people are coming in and saying,
always
I'm going to make all this money here buying this, really low lottery ticket here, and it's going to pay off. I mean, just because there's some sophisticated investors selling it, somebody's buying all these data expiration options too.
Where I would say it's potential, and this is another like sort of Vegas example. You know how like sometimes like in Vegas, it'll be like the Cowboys are playing or whoever, where a ton of money is going to, or Alabama in football or something, where there's such a large fan base, right? And you're against Michigan, right? Like, and there's so much of the fan base that it's almost like Vegas will hold the line and like kind of absorb that, right?
Yeah. Oh yeah.
So I think the interesting thing about 0 DTE is I would assume more than 50% of the order flow is similar to what I just described. So that what that means is on the market maker side, at some point, they need to kind of figure out, they can't, if all they're seeing is people doing that kind of behavior, you can't lower options to 0, obviously, right? And I think where you're seeing it to that question is maybe affecting the market is, I look at like the 0 DTE expected move every day. It's generally about 0.4 to 0.5%. That seems a bit low to me. And it doesn't seem like that is sustainable. And at some point, those sellers of options are going to kind of demand a little bit more premium for what they're doing. And so that's where you might see it, as that sort of standoff between the market makers and those people doing that kind of 0 DTE
All right,
behavior.
CC, I'm sorry, man. We are up against the clock here,
Yeah.
but you had just given such our listening audience an education. We're gonna dial you up again real soon. CC Lagator at Options Learn on Twitter. Thanks for joining us, CC.
Excellent. Great to see you guys.
Thank you,
Okay.
CC. All right, guys, that was CC from Options AI again. I mean, that's just some great information there. As someone myself who I do like to dabble in the 0 day to options expiration, that last point he made, that the expected move only about 0.4, 0.5%. I wonder if that's when what it's either going to close, expected to close up or down 0.4, 0.5%, but then the intraday move might be even higher than that, right? If the market's trading lower, and then you get one of these 0 DTEs out of the money, and then the market turns around. Joel, what are we looking at into the open here? We're about 2 minutes away.
Yeah. I just wanted just really one thing, and I wanted to reiterate what CC said. He was talking about the Netflix options and like going for a couple days for like an 8% move, as opposed to going out like 2 or 3 months for an 11%
Yeah, go
move.
out further.
Yeah, I mean,
I'm with them.
you're giving yourself a shot.
Yeah.
You're a legitimate shot, and then
And
also,
what about the gap and go situation, Joel? Like, I mean, when you go out farther, you give yourself a shot for follow through. Like where you have where a company reports and it's good, and then you have all the initial buyers, the gap, and then the continuation of that initial move. I mean, you make so much more in the gap and go situation. So if you're going to pay 8% for the 2-day option, why not pay the 11% for the 2-month option? I'm with you, CC, 100%.
yep. And yeah, just going S&Ps, we backed off the pre-market high. If I gave you some resistance here, I want to be honest with you, because basis yeah, the front month contract here, my next target is over 5,000, or that's with the rolling front month contract. Do we do want a couple? I know it's 9 o'clock here. Oh, one last thing too, going back to the options. Jay Rice made a great point. If spreads, doing the spreads, a big old spread, you're definitely limiting your gain, but you're also limiting your risk. And if it, if you go farther out with the spread, it doesn't do what you want. They'll just sap the premium out of the one that you sold. So there's a lot of different things to cover. Dennis, let's do a couple more earnings reports here on this Wednesday. Where would you like to go? Something good or something
Well,
bad?
interesting. AT&T. A lot of people hold AT&T. I mean, Verizon kind of blew it away yesterday. Maybe set the bar higher for AT&T, but this is not a great report here. Bringing Aaron Bree here on this AT&T report. I'm actually surprised it's not down more. Thoughts here, AT&T, or actually, Bree, give us the numbers.
Yeah, so EPS, our sales came in slightly higher, 32 billion versus 31.5 estimate. Gap EPS misses by 30 cents. You were expecting about half a dollar, got lower than that. Gap EPS of 30 cents misses by 23 cents. Revenue beats by 560 million. Initiates the 2024 outlook. Obviously not a great outlook. Stock trading down about 2.5%. I mean, you still got a good dividend yield on this one, right? That's why a lot of people hold this stock, because clearly they're not holding it for the chart. I mean, look at that.
I mean, it's been a very much underperformer here, and people have been attracted to the dividend. They've cut it multiple times. I've hated AT&T for a long time, correctly. Still not going to come on AT&T and say buy it here, but it's actually a pretty bad report. It's holding up pretty well. And with the Verizon move yesterday, maybe you do have people coming in here and buying the stock on this as like a catch-up trade to Verizon, but this report was not great.
Yeah.
It stopped where it should have on the downside right here in the lower 16 handle. You had 1, 2, 3, 4, 5, 6 lows in that area. You got to 1630. I think it's going to be thickening up on the way back down if it does go back down. And if this can get back above 17, the bottom of yesterday's range, 1698. So let's see. Punch through 17. You get a close above the 17, then this will be officially buy the dip on the AT&T earnings.
Yep. Then another one we had this morning, just real quick before we wrap up, Abbott, ticker ABT, also with a not great report. Trading lower, EPS came in line, $1.19. Sales beat slightly, but yet you're still seeing the stock coming down. Guidance adjusted EPS of 450 to 470 versus consensus of 464. So basically saying their guidance a little bit lower than expected. Abbott trading down a little bit more than 2% this morning, right at that about 111.5 level here.
Kind of in the middle of nowhere for me. Sometimes there's a trade, and sometimes you just take a pass. And I think I'm just taking a pass on Abbott here.
Well, little bounce off 111. I mean, where's the AI in Abbott, right? I mean,
there's an A in there. They needs an I.
Yeah,
AI. We need ABIT a bit or something like that.
Or ABT,
All right, real quick before we wrap up, we of course have been talking a lot about Tesla's report after the close today, but you do have some other big companies reporting. ServiceNow, ticker now, reporting after the close. IBM, Las Vegas Sands. Let's see, that's about I think the ones we care about the most.
Seagate, STX will be one I'm watching too. I'm very interested in the IBM report because it's had the sneaky AI rally. It has rallied substantially because people believe IBM is an AI play. We talked about IBM being an AI play a long time ago. Finally, the market is starting to listen here. The question is, what do they say? Like the numbers usually are pretty good out of Big Blue, but what are they talking about? Are they talking, AI? I'm curious. Conference call could be, interesting for this one here too. We need to hear some more AI talk from IBM so that they can start giving this, the love that it maybe deserves more. I mean, it's your value AI play, but is it an AI play? That's still to be determined of how big of an AI.
Are they still doing what? Is it still Watson? Is that their AI?
Yeah, well, they've got multiple things they're working on. Watson, I've said in the past. I mean, IBM was working on AI,
right?
Maybe for anyone else.
IBM is like Skype.
Ball.
IBM is like Skype is to Zoom. Yeah. I mean, they were doing Watson. They had Watson playing chess like 20 years ago.
They could have been all over this and been the AI play. And I mean, just, management's dropped the ball on IBM for so long. Stock has gone absolutely nowhere for the better part of a decade. Coming back here lately because people are like hungry for the AI play. People do know they have Watson. They do have, other stuff that they're working on over there. Let's hear about this stuff, Big Blue, maybe on the conference call. Maybe it'd be an interesting one to see. What else do you got cooking there? Because right now, the market is starting to give you a little bit of AI love. Let's see if they can get some more AI love.
Got it. Well, Joel, it is 9:05, where we've gone a little bit past this morning. Who do we got coming on tomorrow?
Okay, so we're going to, you won't know this, but Dennis, who do we have on a while ago? And he talked about, well, we're not going to see a recession in the back half of 2023 and maybe push it off into 2024. And he remained bullish on the market. Do you remember who that guest was?
It was Tommy Lackey once, but I guess right?
Exactly. There you go. Triple D with the memory.
Yeah, Tommy Lackey was all over and made some really good calls with this market. Obviously, we're not all going to get it perfect here, but Tommy was all over early 2023 saying, I think this recession is going to be pushed out further. So I'm curious what he's seeing for 2024 here now, because he thought the recession was going to get pushed out further. It still has not occurred, so it's even further out than maybe Tommy's timeline. But let's see what he has to say.
Yeah, not a lot of signs right now that we're seeing of a recession. Economy still looking good. Market looking good. So we'll see if people are still holding on to that call. Excited to talk to Lackey tomorrow. All right, guys, 9:06 a.m. Thank you to everyone who tuned in to Pre-Market Prep this morning. Thank you to CC Lagator from
hit that like button.
Options.ai. Smash that like, subscribe to the channel, and we do have live trading coming up right after this, so do not go anywhere. The stream will redirect you there. Till tomorrow morning, stay green. If you're trading those options on the earnings, make sure you're listening to CC. Till then, we'll see you.